What is a redeemable deed? Welcome back. In this episode, I'll answer your question, what is a redeemable deed? I'm Ted Thomas, and for 25 years, I've been teaching people how to invest in tax lien certificates, tax defaulted property, which are called tax deeds, and today we're going to talk about redeemable deeds, which causes a little question mark in your mind, but we'll talk about those redeemable deeds, and I'll show you how to make money, and I'm going to give you some examples as we go along. But before I finish, I'm going to tell you about two mistakes that investors make regularly at the auctions, and I'd like to show you how to avoid those. Okay, so let's talk about these. What is a redeemable deed? All right, now this causes a little confusion, but just stay with me and I'll explain it. So a tax lien certificate, very simple process. If the people don't pay the tax on their property, the property owner doesn't pay, the treasurer will confiscate the property. All right, in the tax lien states, they issue a tax lien certificate. In the tax deed states, they confiscate the property, then they sell it at auction. Georgia does it a little bit differently, and there's a few other redeemable states. They do it differently. So you go to the auction, and you bid like you're trying to buy the property, which is what you're trying to do. And if you're the winner, they will issue you a redeemable deed. You're saying, oh my goodness, what is this all about? Well, it's this. It simply means a deed usually transfers a property. Like if I was selling my property to you, I would sign a document, it'd be called a deed. So now I've deeded the property to you. If you were selling it to someone else, you'd deed the property to the third party. All right, so the point is they're going to issue you a redeemable deed. So what does that mean? That simply means that if the property owner hasn't paid their tax, they're losing the property to you via a redeemable deed. However, you don't get possession, not right away anyway. You don't get possession, but you do have the redeemable deed. Now you have to wait, and the clock, like on 60 Minutes, is going to go tick, tick, tick like this. After 1 year's time, if they haven't paid you, the property owner hasn't paid, you'll get the property. But most people will pay the tax. So those people can come forward any day in that 365 days. Any day they can come forward, they can pay you whatever you paid, so you get all your money back. Let me say that again, you get all your money back, so not a losing situation. All right, plus there's a penalty in Georgia, and the penalty is 20%. Now that 20% penalty is anything from day one to day 365. Any day they come in to pay, they have to give you back all your money plus 20%. So that means you get a 20% return. Does that sound like a good deal? Other states do the same thing. But let's stay with Georgia. All right, so now if they don't come in and pay, what's going to happen? Well, if they don't come in and pay, you can actually start a foreclosure action and take the property. And then you get the property for whatever you paid. Now, hang on for a minute, because you don't want to be in too much of a hurry to take the property. If you could just let that deed go into one more day, to day 366, so now they've been outstanding for 366 days, now you're going to make 30%. So the first year, you're in 20%. Second year, you're going to get 30%. Third year, you're going to get 40. And if it goes into the fifth year, oh my goodness. Wow. Think about that. So anytime that you have a situation in Georgia, you're going to have a redeemable deed. That means they can come in, pay you all the money that you invested, and depending upon when they pay you, you're going to get a 20% return, 30% return, 40%. You could go all the way up to 50%. Now, look, I don't make the rules. I'm explaining the process to you. Now, this has been going on for 200 years. This is not a new concept. It's a little struggle to get started. I'm going to repeat just briefly. Tax deeds, you'll get the property immediately. Redeemable deeds, you do not get possession, but you get a penalty return of 20%. These are great investments. All right, now redeemable deeds have been around for a long time. They're also available in other states, so stay on the channel and you can learn about the other states as you go along. So I'm going to keep going on this one so you get a good feel for what's going on. All right, the local government in the county is going to sell these properties, okay? They're going to have tax deed sales. Now in Georgia, they have 159 counties. Every county is authorized to have a sale every month. Let me say it again. Every county is authorized to have a sale every month. Now, if they only have 1 or 2 properties, they probably won't have one. They'll wait till the next month. But there could be as many as 159 auctions in Georgia every month. So you're getting the idea. So if you do invest, you're going to get your money back plus a penalty return of at least 20%. So where are you going to get that in any other investment? You're probably not going to. If the property does not redeem, you're going to get the property. All right, so think about these outrageous returns. You can learn if you'll spend a little time learning with a coach, what will happen is you can learn to buy certain properties that absolutely will not redeem. If they don't redeem, then you know you're going to get the property. And then there's other properties, for example, in the country club. You're probably never going to get one in the country club. Now, I hope you call me up one day and say, Ted, you were wrong. I got a nice one in the country club. But usually in the country club, the bidding goes so high. But anyway, those clients usually come in and pay the tax. But other people might not come in and pay the tax. If they don't pay the tax, you get the property. If they do pay, you make at least a 20% return. So I have students that have purchased over 100 properties in Georgia. That meant they went to more than 100 tax defaulted auctions. Now, in some cases, they only made the 20%. But if they let it go into the second year, they made 30%. If they let it go even further, they can make 40%. You're getting the idea. Again, I didn't make the rules. These rules are in place. Now, rules are going to be important. You better believe they are. All right. Now, my students that really know how to do this, for example, the gentleman that did 100 deals, he now became a coach. Now, can you imagine learning from a coach that's done 100 deals? That's the kind of place that you run over here. All right. So what have I been talking about? This episode has been all about redeemable deed. The foreclosure process, it's a legal process. Don't worry about it. Actually, it's all written up, so it's easy. You just send a bunch of mail. But some people buy property and they get it at such cheap prices, it's amazing. So I see people buying residential lots for under $1,000, sometimes $200, $500. They buy lots, then they resell them for thousands and thousands of dollars. So there's literally hundreds of examples of people doing that. So I'm going to conclude this by answering 2 questions at the end of this video.
Ted, if I'm just getting started, should I go for a redeemable tax deed state, or should I just go with a tax defaulted auction?
It would depend upon where you live. If you lived in a state that was already selling redeemable, just stay right there and buy them because you know you're going to get at least a 20% return. Now, if you're in it for the big bucks, most of the investors that are entrepreneurs and they're kind of mavericks, what they really want to do is they want to buy at a tax deed auction so that they get the property. So they're trying to buy the properties at 60, 70, 80% discounts, and then they have lots of margin to resell them. So if you're kind of a maverick kind of person that you want to get the property, well, you sometimes get the property in redeemable states, but you're going to always get the property in the tax deed states.
Ted, what happens at a redeemable deed auction with those properties that are not sold?
The question is, what happens to properties that do not sell at the auction? Well, they'll probably put them up again the next month because they do an auction every single month, and they'll try and sell it the next month. If they don't get them sold, they'll put them on a special list. Now, I don't know what that list is going to be called because there's so many different names for it. So in Illinois, they call it a scavenger list. In Texas, they call it a strike-off list. In Florida, they call it a leftover lands list. In South Carolina, they call it a forfeit lands commission. The point is the property did not sell at auction, so the county still has it. So you could actually go to the county physically, or you could go online and see if they'll sell it to you that way. I promise you I'd tell you about 2 mistakes, so here they are. Now, this is important. What happens to people at an auction is they get very excited. And if you're excited, you're going to do things that you normally wouldn't do. And one of the things that you don't want to do is you don't want to raise your hand or your bidder card and try and buy a property if you haven't looked at the property. Now, you wouldn't marry the woman if you hadn't seen her. So don't even think about buying a property if you haven't seen it. So if you haven't had boots on the ground and eyes on the property, you don't want to buy it. You just want to let that go by. Because I don't know what could have happened. There could have been a hurricane. There could have been a fire. It might be, if you haven't even seen it, that's next to a chicken barn. And you don't want to be next to a chicken barn. I know that. So that's number 1. Now, number 2 is very similar. You get to the auction. You're excited. The bidding's going back and forth. You miss the one you wanted, so you get bidding on the next one. Well, wait a minute. How can you bid on the next one unless you have an exit strategy? What's an exit strategy? It means you know what you're going to sell it for. So you don't want to buy a property that you don't know what you're going to sell it for, because what will happen is you'll bid, and you might win the auction. Well, it's not important to win the auction. It's important to get a great deal on the property. And if you don't know what you're going to sell it for, you shouldn't be buying it. So that's what exit strategy. Now, below me is a course. It's a free course for you, and it's my gift. I said it's my gift, G-I-F-T, gift. It's for you, and it teaches you about tax lien certificates, and you'll learn about the profits in tax defaulted property. It's my free gift to you. I'll see you in the next video.